I'm Juliette Mann. Welcome to Global Business Europe. Our top stories. You've been ripping us off for years. Trump's message to Canada that he makes yet more tariff threats. Wall Street mixed as investors brace for a trade war and more economic sanctions on Iran. Fast fashion giant Shein targets a $27 billion Hong Kong IPO, a fraction of its valuation just 4 years ago. And game face on in Cologne as some of the biggest brands in the gaming sector show off their wares. A fresh escalation in the trade war between Canada and the United States. US President Donald Trump has declared that tariffs on all Canadian cars and trucks, as well as automotive parts, will increase to 50% from January, from its current rate of 25%. It follows the collapse of trade talks and the announcement of new 50% tariffs on a range of Canadian goods over the weekend. Canada has vowed to retaliate with its own tariffs dollar for dollar, coming into effect next month. In the last hour, Canada's Prime Minister Mark Carney has reacted to the latest escalation, saying Canada must diversify its trading partners.
The goal of our trade negotiations with the United States has always been to get the best deal for Canadians, never a deal at any price or on any time frame. The best deal. Le meilleur accord pour les travailleurs, les familles du Québec. Well, we made progress, and we did make some progress in recent weeks. In the end, that momentum reversed, and we could not accept what the U.S. had offered, nor could we give what they asked.
Our correspondent Nina DeVries is in Toronto. Hi there, Nina. So momentum reversed. What has been the reaction? How much support is there for Mark Carney right now?
Yeah, there actually is a lot of support for Mark Carney. There was actually a survey over the weekend, Agnes Reid survey, asking Canadians what they thought about what happened, backing away from the talks and not taking a deal. And 76% of Canadians support Mark Carney's decision. I think everybody has the same thought in the terms of we want the best deal. We want what's best for Canada, and how, we want to make sure that we're protecting Canadian workers and the Canadian economy. So I think people are overall okay with what he said. Now, of course, there is obviously concern for job losses here. If these counter tariffs also go into place, it's going to even make things worse for the Canadian economy. And Mark Carney actually has acknowledged that. So I think there is also hope that the negotiations will happen before this deadline of September 8th, which is when Canada will put in the counter tariffs. So we'll see what happens there. But like I said, for the most part, people are supportive. And even before these new fresh tariffs came into place, there were previous tariffs, which affected several industries: automobile industry, aluminum, steel, softwood lumber, really had a huge effect on those industries. And Canadians reacted to that even back then with saying, I'm not feeling like I want to support the United States anymore. I'm not going to travel there anymore, changing their travel plans, canceling the travel plans. That was a huge thing. And I'm hearing that again now with these new fresh tariffs that have come in. Canadians are saying, yeah, let's go somewhere else, or travel within Canada, explore our own country. So, that would have a hit on the American economy for sure. We have a lot of people, what we call snowbirds, and they go down to the South, Florida, those kind of places in the winter to avoid the Canadian cold winters. But a lot of them have also said, yeah, we're not going to go there anymore. Shops, when you're grocery shopping or buying things online or whatever it is, a lot of Canadians have already started saying, I'm only going to buy Canadian. When you go in the grocery store, you'll see products will say made in Canada, Canadian produced, and Canadians are looking at that and saying, yeah, okay, I'm going to buy Canadian, because even if it costs a little more, I'm going to do that rather than buying a U.S. product. So again, we're hearing this again now with these fresh tariffs. The premiers were also very supportive of Mark Carney's decision, specifically Wab Kinew. He's the Manitoba premier, and he was very clear during the whole negotiation talks saying, we got to do what's best for Canada. We should be standing up to a bully, saying Trump is being a bully. fully stand up to that and fight that. So he's very much pleased with Mark Carney's decision. Doug Ford has come out just seeing a report from CBC saying he's come out and saying, we should stop providing energy and critical minerals to the United States in retaliation. Well, I mean, whether or not that happens, of course, remains to be seen, but that could also happen. So there's a really huge reaction here. One premier, the Alberta premier, has said, she's hoping negotiations will resume, but she does support Mark Carney's decision. A Conservative leader has asked that Mark Carney reconvene Parliament so that they can discuss this, all together. I don't think it's going to happen, but that could happen. So we'll have to see.
Nina de Vries, thank you very much indeed. Well, so far there's been a mixed start on Wall Street as investors weigh up the impact of a US trade war with Canada, as well as its so-called economic D-Day against Iran. Let's speak to our correspondent, Mitch McGann, who's in New York. Hi there, Mitch. Happy Monday. Look, escalating tensions between the US and Canada. Let's start with that. How are the markets reacting?
Yeah, good afternoon from New York, Juliet. Look, the broad market indexes that we follow this Monday are showing no significant losses. In fact, the Dow Jones Industrial Average is up about 0.3%. The S&P 500 is down 0.1%, and the Nasdaq down 0.36%. So no significant losses, as I mentioned. But if we look at specific sectors that might be impacted by this trade conflict, one is vehicles and car manufacturing. Now, we know many of the vehicles produced in the US require parts from places like Mexico and Canada. And this morning, Donald Trump has posted on Truth Social that Canada has been ripping off the United States for years, not sustainable and not anymore, in capital letters, he wrote. And he added, on the 1st of January next year, tariffs on all cars, trucks, both large and small, automotive parts and steel will be increased to 50%. Now, as a result, in the last couple of hours, Ford is down almost 4%, General Motors is down 1.8%, and Stellantis, another one of these big car makers down in Detroit, it is down 4.16%. So investors of those stocks obviously very concerned with what the president is writing. Elsewhere, we aren't seeing any major movements on the market in terms of specific sectors. Alcohol brands Constellation and Molson Coors are up, but only slightly. Home Depot and Lowe's, both large home department, home improvement stores, they might be affected by lumber tariffs and alcohol-related stocks, as I mentioned just there earlier. They're not showing significant movement. Now, this could be a few reasons. One is that perhaps some of these tariffs were already telegraphed last week as potentially coming into effect if a deal can't be made, but it is early days. As was just discussed, if Canadian tourists stop going to places like Colorado skiing, we can see impacts in the tourism sector. As this goes on in the next couple of months, there are likely to be significant impacts here in the United States as well. So no major movements outside of the auto sector on the market today, but we know Scott Bessent will be discussing economic sanctions on Iran shortly, and investors will be watching that one very closely as well. So lots happening that could still change the way the markets close in a couple of hours.
Yeah, I mean, we haven't finished talking about US-Canada, but look, you've mentioned Scott Bessent. Let's stick with him, because there are reports that he's going to use the Treasury's general account to fund bond buybacks.
Yeah, this is really interesting. This is the TGA, the Treasury General Account, as you mentioned, and it's the Treasury's main checking account. Essentially, it's the main bank account the US government uses to pay its bills and fund services. Now, last week, the Treasury announced a massive bond buyback that we discussed at the time, in part to calm the bond sell-off that we're seeing in the market. But there has been a question for days as to where the money's going to come from to buy those bonds back. Now, it's been reported here in the US this morning that the general account may be used to do this. It's currently what is regarded as a healthy level, about $950 billion US, although it would be risky if the US were to hit its debt ceiling and all of a sudden need that money. But it's forecast that that's unlikely to happen if it does until around next winter or next spring. Scott Bessent and the Treasury have not confirmed that this is the plan yet, but that is one route that they could go down to sort of pay those bonds in this massive buyback scheme.
Mitch McGann in New York, thank you very much. Well, Canada says it will enact retaliatory tariffs against the US from September the 8th. But how seriously should the US take this? David Hennig is Director of UK Trade Policy Project at the European Centre for International Political Economy. Lovely to see you again, David. So, I want to start with this September the 8th deadline. Is it a real deadline or is it a pressure tactic, do you think, that quietly gets pushed back?
I think it is both. I think that Canada is deadly serious about taking retaliatory measures against the US. Political pride, Canada's reputation is regarded as being at stake here. They have every intention of following through. But at the same time, they've provided this window, which is an opportunity for calmer heads to prevail. At this point, that doesn't look likely. But what we know with President Trump is that he's quite capable of reversing course and claiming victory. So he could do this, and he has been given now this 2-week period to do so.
I mean, Canada's economy does lean on the US far more than the other way around. Doesn't that mean that Ottawa has a weaker hand here? You know, whatever Carney says about retaliation.
The nature of the integration between the US and Canada means that both sides are vulnerable here. I've been seeing studies today that suggest that, yes, Canada would take an economic hit from a larger scale trade war of the sort that now President Trump is now saying that he can go higher in tariffs. But I've seen figures that suggest that after 1 year it would reduce growth to zero, but then the Canadian economy would recover after that. So Canadian exports do predominantly go to the US, but the economy is not completely dependent on the US. And at the same time, the US has dependencies on Canada, for example, for energy imports. So if this was to get nastier, then you could actually see both sides suffering economically.
We've talked a little bit with our correspondent about the market's reaction being a little bit flat so far, except for autos. And I'm wondering if you think that the shock has already been priced in, you know, because American companies have had years to prepare for this. You know, are they actually ready, or is this about to hit supply chains like a sledgehammer?
No, I think it's the nature of these particular tariffs where extra on which are being increased. It's only covering 20 billion of imports into the US, and it would only be the same amount of US imports into Canada. And at this stage, that wouldn't affect the crucial supply chain dependencies, for example, in the automotive sector, or at least not primarily. This is more about final products. Some are engineering, but also things like hockey sticks. So it's as yet maybe not so serious. Now, if this gets to the point where those supply chains are affected, where pharmaceuticals trade, where car trade is affected, then I would expect a much bigger impact from the US stock market.
Well, you know, Carney says he's talking to other people. You know, if this standoff continues, drags on, who else moves in to fill the gap? Is this Canada's moment to strike new trade deals elsewhere? And if so, with whom?
Canada has already been talking with the EU, though that they already have a pretty good trade deal with the EU. It's been having conversations with China as well. It's been trying to work on enhancing other trade arrangements. So Canada is already in that diversification place, and it will continue, I think, to work in that way. They can't, though, ultimately replace the US, and there is going to be some calculation that at some point, under Trump probably, but even if it's a successor, the US will at some point take a more traditional and more reasonable approach, and will not be imposing these tariffs. So that is Canada's long-term bet here. This is not something that is likely to stay over time. This is a short-term problem. It may become a medium-term problem, but no other US administration is likely to behave in quite the same way towards them.
David Hennig, thank you very much indeed. Alibaba shares plunged more than 10% in Hong Kong after the Chinese tech giant announced a $10 billion share sale. The company says it plans to invest its net profits into AI infrastructure. The fundraising comes just days after Alibaba reported a 75% drop in profit as heavy spending on AI weighed on results. Oil prices have fallen even as the White House prepares for what it says will be its toughest sanctions yet against Iran. International benchmark Brent crude is trading at around $93 a barrel. US Treasury Secretary Scott Bessent is expected to unveil the new sanctions package shortly. Gold prices have climbed above $4,700 an ounce, their highest level in more than 3 months. A weaker dollar and the US Treasury's recent bond buyback announcement are helping to drive that rally ahead of this week's inflation data. This is Global Business Europe. Still ahead. Shein built its success on ultra-cheap fashion, but now that business model is under pressure. We find out why next.
Everything is a business story.
Welcome back to Global Business Europe with me, Juliette Mann. The headlines. You've been ripping us off for years. Trump's message to Canada as he makes yet more tariff threats. And Wall Street mixed as investors brace for a trade war and more economic sanctions on Iran. Fast fashion giant Shein aims to raise up to $1.8 billion in a Hong Kong IPO. Shares will be priced in a range of $6.05 to $6.32. The top of that range gives the company an overall value of $27 billion, roughly 70% below its peak of nearly $100 billion 4 years ago. Cornerstone investors have agreed to take $383 million worth of stock, but analysts warn that even at the lower valuation, growing headwinds in Shein's core markets of the US and Europe could weigh on the company's fundraising. Now, Shein will start trading on the 1st of September after what is the largest new share offering in Hong Kong this year. Shein said in the prospectus that its first half 2026 revenue growth is expected to be broadly in line with the 1.1% growth posted in the first quarter. The Iran war, European import charges and the end-of-duty exemptions in the US are all weighing on earnings. Fiona Cincotta is an analyst at Citi Index. Great to have you on the programme again. Fiona, look, a $27 billion price tag from a company that was once worth $100 billion. Is Hong Kong getting a bargain, or is this valuation more hope than reality?
Yeah, I wouldn't say it was a bargain. I would say it's probably more realistic. I mean, you know, if we think about it, Shein does have a huge global customer base. It has a strong supply chain. But we are seeing sort of that sense that growth could be slowing, sales are slowing. There's obviously regulatory scrutiny and sort of questions over the sustainability of the demand. So I think that is what is being reflected in this lower valuation price that we're seeing.
But Fiona, New York said no, London said no. What does it say that Hong Kong was the market willing to take Shein on?
Yeah, so it's interesting. So they're obviously willing to sort of embrace the company that, as you noted, sort of that London and New York felt uncomfortable with, especially with those questions over the supply chain. But I think also what's interesting here is Hong Kong is actively looking to attract Chinese or Chinese-linked companies. So it feels like this is a marriage that actually works both ways. Hong Kong looking for Shein and Shein also looking for Hong Kong.
Now, Shein made its name on cheap and fast fashion. Do you think that model is sort of being picked apart at the seams, or do you think investors just stop believing the story?
I think it's definitely a challenging environment. It's a tougher environment than it's been. You know, consumers, I think, are very much looking for, you know, they're more conscious over quality, price, and sort of getting sustainable items as well, and sort of the consciousness of where things are coming from. And I think the other thing to keep in mind here is, yeah, as a result, the growth story just doesn't feel as strong in this sort of model as it once was. And I think once you sort of see that slowing growth, it does mean that we start to question then, where does the valuation actually come from?
OK, so if Shein's growth model is indeed slowing, What does it tell us about how shoppers everywhere are spending right now?
Yeah, so I think, shoppers are much more conscious about where their money goes. They're weighing up cost, quality, longevity, price before actually splurging out. And so, I think that does mean that Shein, for example, and other very fast fashion houses are sort of seeing a problem because that's their selling point, is actually being able to sell quickly at high volumes. And it does feel that we're sort of shifting away from that as a consciousness in the consumer changes.
Fiona, always great talking to you. Thanks so much, Fiona Cincotta. Pakistan is turning to its mountain rivers to meet growing energy demand with clean power. Built with China's support, the nearly $2 billion project has already generated more than 2.8 billion kilowatt-hours of electricity. Our correspondent Daniel Khan reports.
Nestled deep within the mountains of Pakistan's Khyber Pakhtunkhwa province, the Suki Kanari hydropower project is transforming the power of mountain rivers into clean electricity. Built under the framework of China-Pakistan cooperation, the project is making an important contribution to Pakistan's growing energy needs while supporting the country's shift towards renewable power.
Located in the scenic Kaghan Valley, the Suki Kanari hydropower project is one of the major renewable energy projects developed under the China-Pakistan Economic Corridor. It is designed to generate around 884 megawatts of electricity using the natural flow of the Kunhar River, providing clean energy to Pakistan's national grid.
Projects like these aren't about turbines and concrete, but it is about hundreds of people, technicians, engineers, and skilled workers who are making sure that each megawatt of electricity is being produced safely and efficiently.
Our project is producing 884 megawatts of electricity. Once it goes into the national grid, it will benefit not just our provinces, but the entire country.
The project combines advanced engineering with renewable energy technology, harnessing the natural elevation of the valley to generate electricity with minimal carbon emissions.
I was a fresh graduate when I joined this project. When I came here, I saw the latest equipment and the best technology. I believe the Chinese keep themselves up to date with the latest technology. I have learned so much and gained a great deal of knowledge from some of the best people in the field.
Beyond electricity generation, projects like Suki Kanari also contribute to skills development, with Pakistani and Chinese engineers working together throughout the project's design, construction, and operation. Hydropower remains one of the world's largest sources of renewable electricity, and Pakistan's mountainous north offers significant untapped potential.
From these mountains, electricity generated here will travel hundreds of kilometers to homes, businesses, and industries across Pakistan. As the country looks to expand its renewable energy mix, projects like the Suki Kanari highlight how engineering, innovation, and international cooperation are helping power a more sustainable future. Daniel Khan, CGTN, Kaghan Valley, Northwest Pakistan.
It's time to put on a serious game face in Cologne. The city's about to be overrun by gamers, developers and the biggest names in the business as Gamescom puts the global video game industry centre stage. Our correspondent Peter Oliver is there for us. Great to see you, Peter. So, what's the game plan?
Hello. Well, yes, the great and the good from the world gaming industry are in Cologne this week for Gamescom. What we are expecting is over 1,600 exhibitors from, I believe, it's over 67 different nations to arrive here in Germany to show off what's new. Now, among those grabbing most of the headlines are the latest releases from the big studios. That's the new Gears of War game, the latest offering from Final Fantasy, Metro 2039, and the new Witcher video game that's coming out, Witcher 3. Now, the gaming industry is worth over $200 billion annually. That's the global gaming industry. Put that in a bit of context, the global film industry pulls in around $120 billion, just there or thereabouts. So considerably larger, even though quite often overlooked. Well, one of the things that will be announced at this year's Gamescom will be the winners of the big awards that are out there, and the nominations came out on Monday. China very well represented, or certainly Chinese gaming studios. Keep an eye in the mobile gaming category, where offerings such as Genshin Impact, Zenless Zone Zero, and Arkham Knight Enfield are all nominated. And the most entertaining game category, also Escape from Dukhov is in there. And in the most epic game category, and also nominated for Best PlayStation Game, is another Chinese offering. That is Tides of Annihilation. Also, we're going to be looking into a lot of what's happening for the future of gaming. Where will AI take us? Where will cloud gaming go next? And what about those smaller studios that are desperate to try and break into the market that is dominated by the large video game producers? Well, there is a huge section of Gamescom this year devoted to those smaller studios. We'll be trying to grab a word with them. But for that and for everything coming up at this year's Gamescom 2026, stay with us here on CGTN, and I'll be providing you all the updates.
Oh, we're really looking forward to your coverage. Thanks so much, Peter Oliver in Cologne. The headlines. Trump tells Canada, "You've been ripping us off for years," as he makes yet more tariff threats. Wall Street mixed as investors brace for a trade war and more economic sanctions on Iran, due to be announced in just a few moments. And fast fashion giant Shein targets a $27 billion Hong Kong IPO, a fraction, though, of its valuation just 4 years ago. That's it for Global Business Europe. Thanks for watching. More on all of our stories at europe.cgtn.com, and do follow CGTN Europe on Facebook and Instagram and TikTok. And you can go to CGTN Europe's channel on the Telegram app, or scan the QR code on the screen to get stories and updates sent direct to your phone. Coming up next on CGTN, it's Africa Live. We'll see you again tomorrow, same time, same place. From all the team here in London, bye.